A. AI. IBIT ARKKK. IR. Poet Vicrax. A/ZH. N. Good evening, everyone. As we reflect on Friday's market close, we observed a distinct structural divergence across global markets, rather than a uniform directional move. In China's A-share market, the growth style truly shone, with the Chi-Next index surging by 3.06% in a single day, and the Shenzhen Component Index climbing 2.21%. This indicates a concentrated flow of capital into technology growth sectors and areas benefiting from policy expectations. However, the Shanghai 50 index saw a slight decline of 0.12%, suggesting that heavyweight blue-chip stocks did not keep pace. Capital wasn't broadly entering the market but rather selectively targeting growth segments. This assessment is supported by the divergence between the Chi-Next and Shanghai 50, and the stronger performance of Shenzhen compared to Shanghai. In a mirror image of the A-share market, U.S. equities presented their own nuanced picture. The S&P 500 index rose by 0.5%, but the Nasdaq 100 index edged down by a modest 0.04%. Notably, Nvidia bucked the trend with a robust gain of 1.99%. Conversely, several key crypto-related assets experienced significant declines. MicroStrategy fell 4.57%, the Bitcoin ETF IBIT dropped 2.86%, and the ARK Innovation ETF ARKK slid 2.38%. This clearly illustrates that capital within the U.S. market is shifting away from high-valuation innovation themes and crypto-linked assets, migrating towards broader value indices and leading AI computing hardware companies. Combining the surge in China's Chi-Next, the overarching theme for global capital flows can be summarized as a movement away from crypto and high-valuation innovative themes, towards policy-driven growth, as seen in China's A-shares, and towards AI hardware leaders with strong earnings certainty, exemplified by Nvidia. From a data perspective, the Chi-Next's 3.06% single-day surge made it the strongest performer globally. Conversely, the significant declines in MicroStrategy, IBIT, and ARKK, which saw 4.57%, 2.86%, and 2.38% drops respectively, formed a synchronized weakness across the crypto-related theme, marking it as the weakest area. Reviewing our previous morning report, published on July 31st, we had forecasted a volatile, oscillating market, with probabilities of 35% for an uptrend, 40% for oscillation, and 25% for a downturn. However, the actual outcome for A-shares was a strong upward close, with the Shanghai index up 0.72% and the Chi-Next soaring 3.06%, significantly exceeding our oscillation range. The primary reason for this misjudgment was an underestimation of the A-share growth sector's elasticity under domestic policy expectations, coupled with an overestimation of the suppressive effect of U.S.-China tech restrictions on A-share risk appetite. The biggest expectation gap of the day was the pronounced divergence between U.S. tech and A-share tech performance. While our morning report highlighted hot sectors including semiconductor equipment, energy, and AI computing power, with AI computing hardware partially validated by Nvidia's 1.99% rise, the strength in A-share semiconductor equipment and Chi-Next growth was far beyond expectations. The market seemingly disregarded the negative news from July 30th, when the U.S. Commerce Department added 3 Chinese AI companies to its entity list. Instead of falling, A-share growth sectors rallied, suggesting the market interpreted these tech restrictions as an acceleration signal for domestic substitution rather than a pure negative.